So guys, this is my last warning. The most bearish plausible scenario that the market is preparing for is that the nominated for Fed Chair Kevin Warsh marks the top of the bubble in gold and silver, leading to multi-quarter correction driven by tighter than expected policy. Leading to multi-quarter driven correction. Do you understand this? Second, third, fourth quarter, lower highs, lower lows, lower highs, lower lows. This is what the market is preparing for. This is the most bearish scenario. Also, they're expecting a very strong dollar on top of the liquidations of the long positions in the precious metals. What the Welsh nominations actually means for the market? Well, Wall Street is preparing for the market quickly reprice the very bearish on the stocks in crypto and reprice very bullish on silver, gold and other precious metals. There will be a completely 180 degrees reversal on the sentiment, and the current hedges that people explore precious metals as hedges will no longer be the case. The debasement trade will be over. What this even means, not only for America, but also for European Union and BRICS, it's a checkmate. When the dollar becomes again the most powerful currency, when the gold is no longer needed for hedging, well then all the leverages of other countries simply disappeared overnight. The dollar has already bounced on the news today, has already become more and more stronger against the euro. This particular part of the reversal is the first indicator that we're having found the pattern of the dollar and there is a new pattern building towards the previous highs. Wall Street also expects that after the new chair steps in, dollar is not only going to reverse, but will again become dominant power and build the new year-long highs. This will be a major tailwind for the metals. A more independent and less politicized Fed means that the Federal Reserve will be allowed to make decisions, right? But remember, Donald Trump is selecting this person. So again, the decisions still will be more or less discussed prior announcing. Price action and technical bear case for the gold. Today, gold had one of the worst single day drops in decades. This is not just today. Looking at the price action, for the last 12 years, the gold hasn't seen a single day drop between 10 and 12%. This means that we had hit the inflection point of volatility of gold. So far, the gold was making a moves, but was not as volatile. This 10-12% and around 30-40% in silver indicated a completely break-even point where things are already inflexing on the opposite side. Even after 60-70% gain over the past year, which is a classic blow-off top reversal pattern, there is a still chance for even greater sell-offs than the previous very strong consolidation that happened throughout the last 3-4 years. Which means that people who are currently up maybe $300, $500, $600 and they're happy and they're looking forward for the long run. I went on Reddit, I sneak on Reddit group for gold to see how people are actually replying to this particular price. Actually, people said, I'm not worrying about. I'm buying for the long run. Which long run, my friend? Second problem over here, the silver. After the new chair steps in, silver will experience greater sell-offs than the current one we saw. So far, silver has been more extremely hurt, 30-40% a day. This is again single day major declines in decades. Even though silver has been up between 150-180%, year over year, right? But this is exactly the profile, the trends, and the pattern. If you really follow and try to make sense of the patterns of the volumes and the institutional ownership at the same moment. What this means for the silver, this is the exact profile that tends to unwind hardest when sentiment flips, which means the weakest hands in precious metals are actually holding the silver. They're the one who will throw the towel first, and they're the one who will be shaken first. Third main issue and part of the most bearish case for precious metals. A prominent technical bear case now after this particular sell-off today. We're seeing new 30-day medium averages based on volume. We're seeing a completely new Fibonacci retracement building up. If gold loses the 5,000 area and silver loses the $100 area, downside targets could be 4,500 for the gold and 4,300 for the gold, which this is not even the most bearish. I read even bearish scenario from some of the analytical firms on Wall Street who are looking to low 4,000, 4,100, maybe under 4,100. For the silver, they're looking at around 93.70 or 80, which again, this is not the most bearish. I look at earlier people looking at low 50s. Some people even speculate under 50s, and this is very realistic. A lot of people, if you just go back 8 months ago, silver was doing nothing, 43, 45. Gold was 28, 2,900, something like this. No one was looking forward for this. So this means that they're not going to be ready to look down to the previous prices when things happen, right? No one is ever prepared for the price action, regardless what kind of experience or knowledge they got. So these are three main components that consolidate and construct the most bearish case that it is very plausible to happen, simply because the person who was nominated from President Trump will most likely be selected, and the person is known for his views on the market, and Wall Street knows what to expect. This is why when this nomination came, all the big Wall Street firms, investment banks, and family offices, they start building a new thesis for the precious metals, which will be the bearish thesis, of course, bullish thesis for crypto and stock market. Okay, they flipped the switch. They didn't wait, how the market will react. Nobody cares. They already sold, probably, most of these guys, considering that the biggest bets were actually on perpetual futures, so they have to sell. They cannot hold them anyway. So this is why till January 30th, pay very close attention. It will only get worse and hard for you to understand and navigate through these particular scenarios, because they will be popping up every single day more and more articles how the new Fed chair will be focusing on improving the dollar, which is good. I'm bullish on the dollar anyway, and will focus on making the inflation remain at these levels, not pushing the inflation lower, which will completely change the Fed policy and the overall economic infrastructure.